Tushar Mahajan, Head of Derivatives at Nomura India, joins us. Tushar, good morning and thank you for joining us. Tushar, in the last 8-10 days, we've seen some course correction, mild profit booking, and money has moved out of small cap stocks. What would you attribute this leg of course correction to? Reality or a lot of gravity?
That's an interesting one. I think it's got more to do with reality rather than gravity. I would still think that, the index is in a mood not to really, follow the laws of gravity for now, because there is, still reasonable underlying momentum which is there in the markets. I think we had run up significantly well ahead of the election results, and the results kind of came out surprising the markets positively, and that's what we saw in the markets. Once all of that was down, I think the euphoria is now beginning to settle down a bit, and markets are now waiting for the next set of big announcements, or the market moving announcements, so to say, from the government. And I think over the next 2, 3, 4 weeks, we will probably continue to see the markets, trade kind of in this pattern of about 7,200 on the downside and 7,000 on the 7,500 on the upside. And the next big trigger, obviously, is going to be the budget, which happens sometime in July.
But do you think, Tushar, it's going to be a slow grinding move up until the budget, the next big event, or does it seem like the market could get acutely volatile as well?
I think, our market doesn't really like the slow grinding move, so I think the move could get sharper, probably ahead of the budget. But until that time, over the next 2, 3 weeks, we could be in this kind of grinding zone for now.
Tushar, everyone on the street is expecting that the India government will take nice and soft decisions. Looking at the balance sheet, the state of economy, how inflation is moving, there are no easy solutions. Do you think markets are prepared for hard decisions? Because the new finance minister, Mr. Jaitley, has already indicated that, look, he's not going to ease the leash.
Which is, I think, very true, and the market is not really expecting the big bang, things that, there's going to be too much of, the government's not going to loosen its purse strings and all of that. I don't think the market's really factoring in that. What the market is really factoring in is the fact that, you will start seeing project clearances, you will start kicking off the investment cycle on the private sector side, whereas the government balances to be repaired will continue to be a soft-drawn process for this new government. I think the market's very, very well aware of the realities of the government balance sheet, and it realizes that, things cannot happen in one go.
So where can money be made, Tushar? Because last series, one clearly has seen defensives take a back seat. Friday, there was again some jump up coming in, some of the FMCG names, while Infy, of course, dragged the rest of the IT basket as well lower. Does it seem like the tilt is going to remain with cyclicals?
For now, I think so. I think from an absolute perspective, the tilt will continue to be with cyclicals. I think banks will continue to provide more upside on the markets, and you will also start looking at, some of these infrastructure plays, not really the likes of L&T and all only, but, even the smaller cap names, the small to mid cap names in the infrastructure space, which will provide the kicker. Having said that, if you're looking at the next 2, 3 weeks of grind, I think the bigger money could actually get made in relatively market neutral trades, wherein you go long something, you go short something, and to that either within the sector or intra-sector. So for example, names like ICICI and Axis Bank, I think within the private sector bank, you could see some money to be made in an ICICI long ICICI versus a short Axis Bank trade, just purely on a value neutral basis for relative outperformance. But on an absolute terms, with respect to just pure stock plays, I think cyclicals, infrastructure, banks will continue to provide absolute returns to the investors.
Would L&T also form top of your list, considering it's been a great set of earnings, and this stock as well is a big beneficiary of the economy revival?
We would continue to back this name, for the simple reason that in this particular sector, this stock is the first pick of all investors, as a high quality management, high quality corporate governance and all those kind of factors. So the stock is while, it may seem that it's trading expensive, but I think they've already shown the first set of strong numbers on Friday, and we'd probably continue to see the stock being a big beneficiary of sentiment improvement.
Tushar, as an FNO trader, you trade trends. You don't trade value. You simply follow trends. You simply focus on, price charts. You look at open interest addition. What is your take on some of these absolute high beta names? Suzlon,